Hello, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vays. The price is moving, so it is time for another show. And I was notified by the price moving by the one and only Joe Saz. So let's go ahead and welcome him to the show. How you doing, Joe?
Excellent, Tone. Thanks for having me. And as always, great to see you. But yeah, man, things are happening.
Yeah, thanks for being a trooper, man. I know you're a little bit under the weather, so I feel better. And let's jump into the charts. Hope your New Year's went well, man.
Uh, yeah, I had some medications to help put me to sleep, so I'm good.
Excellent. All right,
I hope yours went well too, Tone.
let's go to screen share. Hey, you guys see the Unconfiscatable little banner behind me? That room will be full of people when we do the conference. Of course, Joe says you coming, right?
I'm gonna be there.
Awesome. Hey guys, check out the speaker list. It is absolutely awesome. Uh, there he is. And VK disappeared for a second. And the Financial Summit. Joe, you're going to be there as well. You already got your ticket to the Dominican Republic.
Not only am I gonna be at Unconfiscatable, I'm gonna be ready to play some poker and take some tables down. I can't wait to get there, man. I'm so excited, Tone.
Yeah, it's going to be great. Joe's going to be at both events.
Yeah, and I can't wait to go to DR soon. It's just gonna
Hey
be the
man, did you
best year.
see my oh, I should go to my Twitter. You know what? We'll do that in a minute. Let's go to the monthly charts. We can actually look at the yearly charts. Do you want to do the short-term time frames or start with the longer way?
Yeah, let's go to short term right now
Let's
because
do the
Tone,
short-term. All
I
right.
might need to exit my short position.
Wait,
This is actually turning into a scary short right now.
wait, you're in a
So
short?
yeah, I jumped into a short at 74.89
Oh boy.
and we're
All
at
right. What
75.50 and moving with velocity.
yeah,
Uh
so 4 hour is my low. You use the 15-minute chart, don't you?
I'm looking at right now the order book and the trade history. And I'm watching.
What time frame got you in the trade?
It was the order book and the trade history. It didn't time frame didn't matter to me.
All right,
Um,
gotcha.
right now, I saw a lot of buyer bedrock, so I took a small long position, closed that out in profit, and I did not expect a pump, nor did I expect a pump on top of a pump. So now I'm pretty much breaking a rule of mine, which is not to really exceed a 0.5% loss, but it does seem, and this is why I constantly reevaluate. If you don't mind, Tone, can I share this for a sec?
Yeah, go for it. I'm sharing my 15-minute chart, but I'm gonna stop my screen share. Put yours on.
Okay, so this is why I do what I do. I'm watching this right now, and I'm seeing the orders actually get bought and sold. Now, we can always watch the order book and we can see how dynamic the movement is and see who's more certain than the other. Right now, it seems like bears seem to have dug their heels into the ground, and I want to see if we get any more buys of significance, and of significance, I mean 5, 10 plus. But now we just got a sell of 5, so that's going to take out probably an aggregation and should stimulate. So there's the aggregation that we're fighting for. And I want to see more bears step in because this is pretty clearly a strong, very strong move to the upside. Topping out on the RSI, we have an indication that we've been working on our Kenny. It's been triggering a green signal for a bit of time now, and we just had our bullish crossover. So
Wait, what
uh,
is that? What's Kenny?
so we're me and my team that I keep inviting you to and that you never show up to, man. I keep wanting you to meet these guys.
Welcome to planning 4 conferences a year, man.
I can't, yeah, I don't even want to imagine, dude. But I'll tell you what, you got to jump in for an hour because we got people that know programming, that are good, that are okay. We got
Oh wait,
people that know
go back to the
strategy.
chart. Why did you exit screen share?
So, because anyways, Kenny is a mix of a plus and minus RSI crossover of the moving averages, and we're still working on a number of and this was created by one of the trading team. I don't. I'll keep him pseudonymous for now until he wants to stand up and take a bow. But there's a couple people on our team working on this and great people. We're all very smart in contributing our expertise, but this thing has been hitting and particularly hitting hard on the 4 hour and the 6 hour. Really been triggering amazing buy signals. And this one doesn't trigger until the previous candle is done closing. So if you can see, this indicator is green, and we do not have data out this far into this green candle yet, because this indicator, we don't want this indicator to catch you in the middle of a candle. So anyways, you're going to want to jump on this when it hits, and the dark red and the dark green, which you'll get from time to time, have to do with buys and sells.
So what
So
is it signaling like right now, or what did it signal going into the current candle?
right now, it's well, we have, if we drag this up, which is the one that we're testing this. This said go long. This said go long in this candle now. And this has obviously been a 2.73% profit on this 6-hour time period. So we've, say we averaged in, we would have made a good bit of money here, peaking out at 76.67 and holding for now, and maybe even climbing on top of that. Man, this is a crazy move.
Yeah, you're in a rough short. I'm watching the 15-minute,
Yeah,
which you like, and you're about to go into a double nine in 45 minutes, which I think should top this market. But, 45 minutes in the current environment could send this thing, above 76. So it's, time versus price. It's getting a little overextended on the short term, but it is Bitcoin, so anything can happen. But the last time you did have a 9 sell, actually the last few times you had a 9 sell on the 15. If you go to 15-minute chart, man, the 9s have been pretty good. Other than that 9 right there, which then signaled a new buy on a green 2 above a green 1, the rest of the 9s have been pretty damn good. I'm not actually
damn.
sure what that red arrow represents. It's probably at one of the
Oh,
third.
this might be our indicator. Whoops. Sorry,
Yeah,
that's ours.
that's not mine. Yeah, so that one, the 9s have been good. If you zoom this out a little bit, if you want to double click on your price to
Oh,
get rid
that's
of the
beautiful.
indicators for a minute, there you go. And yeah, and then there was a 9 back there where the 21-hour mark is. So the 9s have been good. You're about to have a double 9 on a 15, which and then you missed the 9 right there, a little bit to your right.
Here's this one. Here's this one.
Yeah, that one there is a good one.
Yeah, these have been really good.
Yeah,
Yeah,
these
I gotta
lines
say,
have been
this is
really good across the board. You got one more coming. Like, I don't know how leveraged or how big your short is, but if you could hold this out for 45 more minutes or 40 more minutes, there should be a break in the action there for you to think and reevaluate this trade.
Yeah, I'm gonna agree with you on that, and I like how you said, depending on the velocity, excuse me, and the velocity of the current move. I think that's very important, and that's definitely has a lot to do with an understanding of the relationship of trading this asset. So, you definitely know your stuff. I'm gonna let this one sit out for a bit, and this is pretty much what you're saying is not time to panic. So,
Yeah.
and not over leveraged, which is a really big important. I learned in Bali from Ugly Old Goat in person.
Yep. You're already looking at a reversal candle, but 12 minutes to go. It's only 3 minutes in. All right. Anything else you want to say on a short-term scale?
No, I think right now I want to hear you talk, and I want to observe this, and I'll let you know if this thing does some sort of retrace. I'll keep you posted.
Yeah, I want to head over to Twitter, my Twitter to be specific.
Who did you start a fight with this time?
No, nobody. Well, only McAfee, but that doesn't count. Man, like it's incredible. People keep comparing Bitcoin to a Model T, as if Bitcoin is the company Ford. I mean, this is how crazy people are, right? Stop comparing Bitcoin to corporations. You can compare Ethereum to corporations because they are a corporation. You can compare even Litecoin to a corporation. You can compare everything in the crypto space to a corporation that is competing with other corporations. That's not what Bitcoin is. Bitcoin is the TCP/IP layer. Bitcoin is what all of this shit will be built on top of. All of these altcoins will eventually be merge mined with Bitcoin. Not that that's a good thing, but that's the end result. Anyway, so like at least once a year, I send out my view of probabilities. And it's no different this time. So it all started with this tweet. This tweet took place in May of 2018. So you got to look at the situation here. Back in May of 2018, I want to go back through these tweets, okay? Now, those that were watching me back in the day, you would know that I was a bull in the market from early 2016 all the way slightly past the high. Now, I called several tops along the way. I called the $3,000 top absolutely perfectly and the buy point at 1,800. I called the $5,000 top absolutely perfectly. Like we're talking almost to the hour of that top. My track record was clearly much better back then. It was much better in the bull market than in the bear market, I guess. I also called the $3,000 bottom absolutely perfectly, almost to the hour, just like I did with this top. I then called the top at 7,500, anticipating that to be the top of the bull market at the time, calling for a correction to at least 5,000. The correction went only to 5,400 and very, very quickly. I then became a bull once again once we went back above 7,500. And I was a bull all the way to about this big red candle. No, actually past that. I was a bull until this second red candle. And I became a bear around January 10th. This is when I started saying that Bitcoin had a high probability of going all the way down to the prior all-time high at about 1,300. Though with the halving coming, you can almost double that amount now that the halving is here. But basically, that's what I was looking for. So my first probability tweet came out when Bitcoin was, this was in May. It was around consensus. And Bitcoin was about $9,000 at the time. So the bear market is just getting started, right? We fell down to 6, rebounded to 12, fell down to 7.5, rebounded to 10,000. And just as we were pulling back from 10,000, I sent out my first set of probabilities. I gave it the highest probability of 25% that we would fall below 2,000. I then had my second highest probability that we would only fall down to 5,000. And my third, we would fall to 3.5 to about 3,000. And then we would still go below 6. Remember, at the time, we never went below 6. So this originally went out before Bitcoin ever touched $6,000 in the bear market. So for those that say that, hey, I got it right by 12%, that's actually not true. At the time, people thought that the bull market was never going to end. So you got to add these three probabilities together. 20 plus 23 plus 12, that's 55%. 55% chance we go under 6,000. Okay. Now 3,000 did the job. I thought it would go lower. It did not. But my chances of going to new all-time highs were always pretty low. I had an 11% chance that 6K was the bottom and we get a new high next year. I didn't expect a new high in 2018. This was May of 2018. Now we move on to the next set, which was towards the end of the year. This was at the very end. Which one was it? This one. This was at the end of 2018, going into year end. Again, look at the picture. I felt that this low was the $5,000 low. And the way we got there, I felt that that was similar to this low and a lower low is coming. Now, this was 5,000. This here is about, what do we got? $280. and this is $150. So this is, so what's the percentage difference here?
From
185
200,
down to 150. That's about what, 35% lower?
from 285?
285 down to 150.
Yeah, let's say 40%, 42.
Yeah, it's about 40% lower, right? So I felt that a lower low was still coming from 5,000. And that's why if you look at these probabilities, that's exactly what you have. We hit the 5,000 mark. I gave it a 35% chance we'll fall below 2, and then 20% chance we would, be in the 2 to 3 range and or 3 to 4 range. But I had a, what is that, 50-70% chance we're going lower. Wait, 80% chance we're going lower. I gave it an 80% chance that is not the low, that we're going to go below 5K. That's exactly what happened. And we ended up bottoming out at 3,000. Now, in hindsight, the ratio was exactly the same. The final bottom came in at 3,000. 5,000 to 3,000 is about 40% lower. That's almost identical to this, 185 to 150. Give or take a few percentage points. Now, at the time, we did that so quickly. We did that 2 weeks later. And because we did it so quickly, I felt that this entire move was this. And I wanted to see the low, that low happen later in time. In hindsight, this was the bottom. Well, it happened a few days later, but in hindsight, this was the price low, which at the time of the tweet 2 months earlier was actually in line. Now look at these probabilities, right? I gave it a 10% chance we would go, because it was happening so quickly, I gave it a 10% chance we'll go, below 1,000. 40% chance we would go to the $1,000 to $2,000 range, and 20% chance we would go to $2,000 to $3,000 range. So I was maybe a little too bearish right here at this low, but the low actually hasn't happened yet. As you can see, we made the low a little bit later because we actually touched the 200-day moving average if I go to the live chart. So the low wasn't actually in yet. The low came a little bit later than that. But look at this. When new all-time high, I gave it a 10% chance we would make it to a new all-time high the following year. Remember, this is still a 2018 chart. 40% chance we would go to a new all-time high in 2020, and a 45% chance we would go to a new all-time high in 2021. Now look at my tweet from today. And compare my expectation for a new all-time high. Because the bear market has actually extended time-wise, because of this giant exponential rise to 14,000, while I do believe the low is in, but I do still think we're going to go back to that $5,000 area at the moment. I also don't think a new all-time high is coming until, well, if you combine these, right, I don't think the new all-time high is coming next year. I think that's unlikely. A new all-time high happening in 2021 is possible, but I really think this bear market, while it may not go, well, because it didn't go down in price as far as I expected, I think that would extend the accumulation period in time. Markets bottom either in price or in time or both. And because this particular bear market, I felt it didn't go down low enough in price to cause the maximum amount of pain for people. I think because of that, the bear market might extend in time to frustrate people without making a new all-time high. So I just wanted to go over, the history of these tweets and the views on my percentages. As far as the price is concerned, I still think there's a 15% chance we go below 3K, a 20% chance we go under 5,000, 25% chance we go under 6,000. Okay, so altogether, Do I think we go below? We haven't gone below $6,000 yet in this current 6 month wave of bear. So I am giving it a 60% chance we're going to fall below 6,000 and then bottom out. That means there's a 40% chance that we won't. That's my
Uh,
view of probabilities, guys.
yeah, I was gonna say let's debate a couple of those
Sure.
concepts. I mean, we're in 2020, and this is feeling like a good year so far. I think we did, I agree with you on the parabolic uptrend beginning April 2nd, or really kicking off April 2nd and ending in June was, a big market move for such a short period of time. And we've done more consolidation now in the past number of months, maybe 3 to 6, than we have in, you know, pretty much every time period before that. And basically, the way I look at what we're doing now is this is either an accumulation style of the December to April range, or an accumulation style of the October November range.
Of which
Maybe even
year? Oh, let's back up here. Can you just repeat
of
those
which year?
ranges and say the year?
Yeah, you know what? Let me look at my chart. You can leave your stuff up, but on my chart, I would say, oh darn it. Okay, so this accumulation phase is similar, excuse me, similar to December 18 to March 8, 2018. That type of accumulation, and I'm seeing a lot of wicks to the downside, so it's making me feel a little bit more bullish. Our current accumulation, or do you want me to just take screen share for a sec?
No. I got it. I understand what you mean.
Okay.
It's funny. So I got that same question recently on a video. I don't think you watched it. But let me just reply to that. I see a huge difference between the current accumulation and the accumulation going into 2019. There's lots of main differences. The first one being this accumulation right here actually looks more like a bearish pennant flag to me for starters, off of this flagpole right there, the big down candle in the beginning of November.
I
The
still look at that one pump as an anomaly, like a pump from 7.3 to 10.5.
Oh
Like
yeah,
that's
yeah,
way
yeah, yeah.
too.
No, that was a total anomaly. I'm with you. I'm with you on that. Let me just say a few more differences here. I of course agree with you on the wicks along the bottom. Those wicks are pretty bullish, but keep in mind that this accumulation took place after a very large capitulation at the end of a year-long bear market. It also had clean support at the 200-week moving average, which I am still anticipating. Okay, so those are basically my main views. Also, we are going to have, no matter how you look at it, your intermediate and short-term moving averages on the weekly chart will be crossing over. And that reminds me more of this July period of, consolidation and making that additional low. Like this low here reminds me more of this low here. And we had, nice wicks along the bottom here, rallied nicely into the depth cross, and then continued to make this descending triangle.
Yeah, it's so funny. That makes a lot of sense. I hope that's not the case. But one comment I would add to the overall market sentiment here is, in my opinion, I feel like any trader that started, in the, before the parabolic uptrend of 2017 or during it, has basically gotten the advantage of experiencing two bull and two bear markets in basically 3 years, less than 3 years. We have, the massive uptrend, massive downtrend. I mean, we have traders, anyone that's been around has and stuck around has now gone through a ton of emotion and is, hopefully hard as a coffin nail and ready for the next one. But I'm looking at those wicks down there the same way that you're pointing them out at around the $6,300 Bitcoin. Yeah, right there. And then the next set over. So, a series of lower highs, but solid support. Now, I think in my eyes, I would say the descending triangle play in this case already broke. That was our breakdown from the 10,000 to 12,000 range, with actual price action in between the two, down through 9K into a high of 7.9 at the time, and then an eventual low at 7.3 before the pump, and then a final bottom so far at this point in time with a bottom of 6,400. Um, for now, I think that this is two different bull markets and two different bear markets and two different descending triangles. And that 40% pump basically made the capitulation look a little weaker than it actually was. And I do believe that I would consider this more of a consolidation than an area for dead cat bounce after dead cat bounce until breakdown, despite that bearish crossover you have coming up soon.
All right, let's look at the price chart. And yeah, there it is, man. You held out. The 9 is coming. It's not going to be a clean 9. It should still be a 9 in 10 minutes if the price remains constant. Won't be perfected, but yeah, the bounce is over. When did you short? 74 what?
89. So
74, 89?
yeah, I'm out a little bit. I got wicked down to it, and I think that since we're already spending a little bit of time in the wick space on the 15-minute candle, I'm inclined to think that I'm going to at least break even on this trade. But honestly, I don't even think the next 15 minutes is how long I need to be patient. This might be a 3-hour trade, because this was way too much upside action. And even though this is bullish, and this is what I want to see in Bitcoin, I do believe that we're in a transition phase. I do believe that the transition phase is transitioning us from a bear market to a bull market, and that we're near the end of that transition phase. But I still think that violent moves like this or irrational moves to the upside are still going to spook sellers enough into jumping against them, the bulls. And so that's why I think consolidation is so important to build a psychological price level that traders are going to typically, find a range in to trade as opposed to be looking for pumps and dumps to hit. So right now I'm looking at this and I'm thinking this was a little bit of a violent upside move, a lot of volume behind it, but there's a lot of wick space in that volume. So that could be a bit of rejection. We've gone through a lot today already, so it's a little bit of turbulence as it is. I think this could have been more likely a liquidation hunt, stop hunt type thing. And I think that will easily come back down to some of those moving averages down there. But as far as 4 and 6 hour divergences are concerned, I think the general trend is bearish, and I'm willing to sit and wait this one out even a bit longer than the 15-minute 9 that I would like to see. And the fact that we're topping out on a 7 is one thing that would make me feel like I want to get out at near break even, because a 9 to me is an exhaustion of a trend, and seems like we've exhausted our trend already. But I would certainly be willing to let this trade sit a bit longer, and I don't think I'm being greedy by letting that happen. I think I can get rid of
No,
it.
I don't think so either. I think at the least it should come back to here. Wait, why is this not moving? I think at the least it should come back to here, and most likely a wick slightly below it. So I do think no matter how you slice it, I mean, it should come down and wick down to 74.60 area.
Yeah,
So you should be able to get out of this trade with a profit, not just break even.
yeah. This is just the patience.
Even if we do hit 8,000 by morning.
Yeah, I still like, even 82 is my target right now. I'm bullish to 8,200, and like I said, all these upside movements make me really excited. I think that that's a good target both for for Bitcoin and for us to be swept into the current of the halvening hype, which is 5 months out, 5 and change. So if we can get that 5 months out, that's great. And if we could ride that current and let's say glide that current, we don't have to be violent to the upside. We don't have to make a 300x gain, but as long as we can be pulled into that current, faced with mostly upside action, and have to focus a little less on the day trade stuff and focus a bit more on the swing trade stuff, we can get our longs in now. We can get our longs in the 6Ks if you did, and you can sit and wait and let your Bitcoin increase in value and let your longs look beautiful. I'm really hoping that that's the phase that we're in, and it's moves like this that convince me, especially seeing the volume and stuff, knowing that we chewed through a ton of resistance in the order book, and that at some point sellers are going to keep getting pushed enough on their heels to the point they fall back. And where's that point? I think 8,200 is going to be a strong reevaluation for that. And every step we take towards 76, I think, is going to be a more likely step that we take towards 78 as well.
Hey, so I got a good question in the live chat. Tone, what fundamentals of Bitcoin need to be in place for you to think a new all-time high will be in the cards relatively soon? Joe, you want to take this question first, and then I'll do it.
Could you repeat the question? I'm sorry.
Yeah, your trade's looking better.
Yeah.
What fundamentals need to be in place for you to envision a new all-time high in the near future?
Well, I pretty much said it. I think the halvening is a big part of it, and not just that. The fact that we've hit a 14K Bitcoin pre-halvening and pre-all-time and post all-time high. That's definitely reminiscent of the sugar hyperwave and maybe another. But I think that Bitcoin might be an anomaly that we have to accept. And 14K Bitcoin into the halvening, I mean, moving up double that from 7K is a 14K Bitcoin. Can we do that in 5 months? With a strong external narrative like the halvening, which is always going to be a scarcity driven demand, I think that's certainly possible that we have a fundamental thing that creates a external bullish narrative. And this one is something that's timed. This isn't reliant on any ETF, SEC government body, any garbage like that. This is just something that's going to happen whether anyone wants it to or not, and that's a fundamental that I'm willing to put money on as far as giving us a return.
Yeah, so Joe mentioned that sugar hyperwave, and because he attended Tyler Jenks's class, and I just want to back up and point it out that this is what we're talking about here. It's on a monthly chart. Hyperwaves are generally weekly charts. You probably go to a weekly chart. I'm more curious about the weekly chart sequential perspective, but oh God, we'll have to condense this quite a bit to go back into like the 70s, 90s. And here we go. Okay, so this is what we're looking at, and I'm going to zoom in on this a little. So from a weekly perspective, wow, what a reversal candle there. Oh, tops on a 9. Well, one candle off. They're a 9 combo 13 with a double 9, and then boom, monster reversal candle on a weekly. And you would think that a fall from $65 down to $8 is enough. You consolidate for a couple of years, start to have another monster pump, doesn't make it to the new all-time high, tops on a 9 again, right there, and down we go, and we actually went lower. Sugar went and made a new low at around $3 right there. All right, even below 3. So, okay, so let's go back to Bitcoin. One more minute, and then we'll get our 9. Nice.
And you're using Bitstamp?
I'm using Bitstamp, yeah.
I've been thinking about them a bit more ever since you talked about it. I think Markowski, one of our main guys, uses it. I think it does produce better 9s than Coinbase Pro does, as far as charting is concerned for any of your viewers.
Yeah, no, that's good to hear, because you are looking at more than one exchange. Okay, so, but you see, I don't see the halving as really a fundamental event, sort of, right? Like everyone knows when the halving is, everyone knows it's coming. The halving it's special, but it's not conceptually special, right? Like what else, like what fundamentally needs to happen for Bitcoin for you to be more of a bull. But you're a bigger bull than I am, right? I'm probably the biggest Bitcoin fan that's a bear in the world, right?
Yeah, I would also say I'm fresh blood. I got into this 2017 Moon Boy hype. You know what I mean? So I'm like I was born into Bitcoin, a Bitcoin bull. I did start my journey a bit sooner, but I didn't start trading, as you know, until 2017. So I've been waiting. I actually was in denial April 2nd when we started going parabolic. That did not feel like the time and place for a bull run, and obviously it was, but as you know, pretty short lived. I
Well,
think
yeah.
it did.
So we were right. I mean, we were very skeptical of that bull run, and clearly, we will see. Like I said, I still think slightly lower prices are coming. Okay, so for me, it a lot has to do with the shit coins. So I still say that the main reason why Bitcoin went up so much back in April was because of this move in shitcoins, this Bitcoin dominance move over here in 2019, the first half of 2019. This had a lot to do, I believe, with the rise in the price of Bitcoin, the big exodus out of shitcoins. Now, you can also say, hey, Tone, but there was a bigger percentage move in Bitcoin dominance throughout 2018, and it was all in a bear market. But that's because Bitcoin was in a bear market itself. You see, in 2018, Bitcoin was falling. It's just that the shit coins were falling faster. So those that were getting out of shit coins, and very few were, in 2018, most people were in denial. Everyone was holding their shit coins, and everyone was holding Bitcoin, and everyone was just losing money. But at the end of 2018, we had this stability. And during this stability, people realized that shit coins are shit coins. Now, the real garbage shit coins were all already dead. But Litecoin, Monero, Ethereum, Ripple-ish, right? Those shit coins were still alive, and people had sufficient value in them. And throughout this period, they realized they had to get out of shit coins. And now the exodus out of the top 20, top 30 shit coins drove Bitcoin to that exponential rise. And it wasn't natural to Bitcoin. I think it was mostly driven by the rotation out of the shit coins. Now, right now, the rotation out of the shit coins has ended. And that's why Bitcoin has remained in a struggle since that $14,000 top. And because a lot of these shit coins have lost so much value, another big exodus out of shit coins will not drive Bitcoin as much and as quick as it did in the first half of 2019, because Litecoin is already at like $40 or something, or whatever it is. And Ethereum is at 180. It used to be at 1,600, right? So a lot of these altcoins don't have that much value. They have some value, but not that much value. So another rotation out of shit coins, I don't think will have the same parabolic effect on Bitcoin rising. So now we actually do need new money coming in. Either it's money of the current players, like, for example, I don't know, someone that believes in Bitcoin and is getting, still has a regular job and is constantly buying Bitcoin, and there will be less Bitcoin to buy with the halving. Or we actually need fresh blood, people that never had Bitcoin before coming in. Because if you never had crypto before, unlike in 2017, you're not getting into this shit through a shit coin unless it's Bitcoin Cash. So, but there's still a lot of confusion. So for me, there are two fundamental factors that will turn me immediately into a bull. A total collapse of 5 of the top 10 shitcoins, Ethereum, Litecoin, BTrash, BSV doesn't even count, Binance token, Binance gets declared a security and the token stops trading because it's illegal for them to trade on unregulated exchanges, and no regulated exchange trades it, right? So a total collapse of 4 to 5 of the top 10 Bitcoins. Litecoin has its mining death spiral and just goes to zero. And people realize what crap they are. That's one way. And people in the space just get smarter about, Bitcoin. And another fundamental factor that will immediately turn me into a bull is the SEC coming out and saying that they are approving the Bitcoin ETF. That's another fundamental factor that will immediately turn me bullish, looking for an imminent new all-time high. Even if the ETF's not there yet, like the speculation that the ETF is coming is enough to drive Bitcoin to a new all-time high. You good, Joe? You muted.
Oh, sorry, I didn't realize I was muted. I don't think Bitcoiners are really sitting on that hope anymore. I think the action right now is more technical than emotional. I think the upside is a little bit more irrational for obvious reasons. We have altcoin exodus going on. Excuse me, sorry guys, I got bronchitis and all this stuff. But I'm pretty convinced right now that as far as an ETF and stuff like that is concerned, the one thing that I'm really holding on to is going to be the halvening sweep. And I would actually argue, in theory, that it could actually be one of the best halvening scenarios historically versus the 50 to 25 or the 25 to 12.5, where we were at near 50% or even below than that levels in some cases. I think it's possible that we could be above that 50% mark, and I really do believe it's possible that this, depending on the FOMO involved in this happening current, I think it's possible. I mean, I would say that the one other thing I wanted to debate you on was the 2020 high, all-time high, and I think it's possible that this happening could have something to do with it. But I think it's more likely that February is going to be my point in time when I could say, all right, January's done. January, I think historically is a bad month for Bitcoin, and it's nice to see us fighting to, fight for a good range. And the first candles coming out into the new year are green. So, anyways, I think you might have a comment here to take a look at gold and WTI.
Yeah, well, gold, I mean, it's the weekend, right? I mean, actually things just started trading because it's Sunday night. Yeah, hey, Joe, I would be real careful if the price of Bitcoin goes above 7,555. I think it's ready for another pump. So it's like the next 15 to 20 minutes should tell the tale of whether your trade is going to be profitable or not, I think.
Yeah. I'll make sure you know what I do. I'm going to actually flip to the order book while you talk about gold. I'm here listening.
Oh, yeah, look at gold pumping. So at this point, it probably has to do with the whole Iran debacle, but I still don't think this is. I mean, look, obviously it's in a bullish trade, and I've said this already. I still think that it's not gold's time yet, and when this Iran thing with the U.S. ends, gold could fall just as hard. But as far as trading is concerned, the chart is certainly bullish. And look at your moving averages. They're all above each other. They're all rising. So in a retirement style portfolio, it's time to be long gold, even though fundamentally, I don't think it's ready for new all-time highs anytime soon, but I could be wrong. But I will be wrong while being in the right trade. Like, that's not a problem at all. Gold doesn't have to do what I think it will do, but it probably you would be in a bullish trade. I prefer the stock market because the stock market. Let me see what the price is doing today. So the price today is down, but overall, the weekly chart is not gonna show up until the market is actually trading. I don't think this is showing me pre-market data, though it may. I don't know how TradingView does it. No, it's not. I don't have the pre-market data.
Yeah, it's usually like a little green symbol or something.
Yeah, but you got to wait till the market opens, right? This candle doesn't mean anything yet. We can still open positive because that's where the market closed yesterday, 3235. So we can still open positively. I mean, the market doesn't open for another, what, 12 hours almost. So anything can still happen. Don't judge the market by Sunday 10 p.m. In the pre-market futures arena. It's not enough data. All right, before we go back to Bitcoin, hey guys, if you want to support this free podcast, please check out the affiliate page of tonevays.com. And if you are going to register and you subscribe to TradingView or VPN service, or you're going to trade on exchanges, please support by using the affiliate links. All right, daily chart, weekly chart, haven't talked about those at all. Look, while the 15-minute chart is exciting and most people are short-term traders, yourself included, Joe, the weekly perspective is not interesting. We're consolidating for 1, 2, 3, 4, 5 for 6th consecutive week. We are consolidating. We continue to flip on sequential. We are now squarely below the intermediate term moving average. And now the week just started a few hours ago, so this candle can end absolutely anywhere. But the weekly is not exciting to me right now.
Yo, Tone, this is going to be goofy as shit, but check out the 55 moving average, simple. And tell, are you able to flip that or no?
No, on a weekly or a daily?
Yeah, weekly, 55. Just switch your 50 to 55, and I think.
Is it really going to make a big difference?
I think, yeah, dude, you're going to be. I know what you're thinking. I told you it was a goofy idea before. It's just trust me on this one. I've been paying attention to this because I think that there's something valid here, and again, I think this is something that someone from the trading team came up with.
I mean, is this something like somebody looked at over the last 5 years, or is this something only for the last 5 weeks?
This is something that we looked back a little bit, but I mean, it's been really interesting. You could see where it was resistance and support in the earlier, in the May region of the picture. You can see that all the wicks and bodies are really just, it's holding them up well for now. And if you run it back, if you want to run it back a bit further, go ahead. But I like the 55, at least for right now. Either way, to me, Bitcoin has a short memory and traders have a short memory that trade Bitcoin. So I would say that the 55 is definitely valid. I found especially this latest stuff to be really interesting.
Yeah, well, either way, it still has to get over a short-term moving average. And while I'm always messing around with the short-term moving average, because I don't think any of them are that good, I was using the 7 and then 21, and now I have 25. It doesn't really matter, right? As long as and then before I had the 30. The long-term moving average is not debatable. That's 200. The intermediate term moving average, some people like the 100, some people like the 50. So anywhere for the intermediate term moving average, anywhere between the 100 and the 50 is really up to you. Joe likes 125. I like the 50. Here's the 100. Look, great support right there. And kind of right in line with the Fibonacci line here. So it's whatever floats your boat on the intermediate between 50 and 100. I will go back to the 50. The short term is always tricky for me. That's basically anything between the 7 and the 30 for me. And no matter how you slice it, the short term is going to intersect the intermediate term. And that's never good. Look at the weekly chart. Anytime the short term had crossed beneath the intermediate term, even when the intermediate was rising at the time, which it probably will every single time, it didn't end well. And the bear market always got extra extended. If I take this over to Brave New Coin, I will have more history, and I'll probably get one more crossover back in the 2011 days, maybe. maybe not. But and that is the part. It's that crossover that has me concerned that while the low is probably in place and we're not going to go below 3,000, the fact that we will stay under 10,000 could last another year and change, even with the halving. With me, Joe?
Yeah, I'm just thinking about how the intersections that we've dealt with in the past, like that just secures my idea that this is, that we've had the luxury of living through two bull market and two bear market cycles in such a short period of time. I mean, this is so much market data. So I would say anyone trading, make sure that you learn from this. And these are some very valuable lessons that you usually don't get in 10 years. But um, looking back and everything, I still feel like on the weekly, I think this was an interesting weekly close. I do like the wicks right now. I love candle patterns, candlestick patterns. I love Bitcoin finally accumulating. So as long as that's happening and we're making our way steadily up, 8,200 again is going to be a big reevaluation target for me. And I'm not yet convinced until we hit that or fail to hit that a lower low. I gotta say, I used to be with you, Tone, on a $4,500 Bitcoin. Right now, I'm actually thinking the tide has shifted a little bit. I think it's possible that Bitcoin is a hyperwave anomaly.
All right. Yeah, no, we will we'll certainly find out soon. Because I'm looking for that ultimate low to take place before the halving, and we're only down to less than 5 months, right?
I know.
And considering the hash rate, that halving is coming sooner than later.
It's like
When
we
is
have the hash
when
rate
is the halving?
increasing. We have
Bitcoin
the halving is May 19th, 2020. So
clock.
we're literally like 5 months and like 15 days out or 14 days
What do
out.
we got here? May 13.
May
It's moving up.
13th?
Yeah, it's moving up.
Oh shit. Well, I guess Satoshi's birthday, Satoshi's sister was wrong. I thought she said it was like the 19th or something. Or
It
not
probably was.
Satoshi's
It probably
sister.
was the 19th, like a month or two ago.
Yeah.
But I mean, the hash rate is rising, so I mean, this estimate changes, right? It's like it's like the old Microsoft, how long does it take to transfer files thing? And like there was a famous screenshot, like 250 years to download this file.
Yeah, I'm looking at the comments and I'm gonna say I do think that the bear market is over. So I'm gonna be the other side of the spectrum for you, Tone. I'm gonna actually present the argument. I do believe the bear market is near its end, and I think we're transitioning our way out.
Yeah, no, again, I'm looking for that low to take place in the next 120 days, right? So that's 3 months
Well,
left. 3 months
you
to
think
go.
a new low? You think
Well, four
something
months.
below 6,400?
Yeah, no, I am still looking for a low below 6,000, but that low, I expect it to take place before the halving. So
Mm,
time is running out slowly.
yeah. Yeah, that's one of the things. I was always like, I spoke with Harry Grid from Harry from Grid Mining. Kept talking to him about some terribly bearish price targets heading into the halving and stuff. And I think it's how much price action can we get done before the inevitable halving current sweeps us up and we start pumping. I think it might not necessarily be parabolic. It might not necessarily be violent, but it'll definitely be upward pressure on Bitcoin caused by scarcity, increased scarcity. So I mean, what the clock is ticking, like you were just showing, and I'm not so convinced. If we're 5 days in January, it's looking okay right now. I think consolidating in the mid 7Ks, pump, dump, whatever, I don't care. Consolidation out of a bearish 7K territory puts us up for an 8.2 Bitcoin, and 8,200 is nowhere near bearish in my eyes, especially walking into a halving. I just can't imagine this happening, especially with numbers that we see right now. I don't see a doomsday event and tulip trust bullshit that causes some sort of garbage in price. I'm just not seeing it right now. So until I see it, I'm going to assume that the past is going to play out again, or compare apples to apples here. And I think that since the price is already so high, and we've had such a higher high moving into the halvening. I'm really pretty optimistic about this halvening, even though I think, Tether was largely responsible, Tether manipulation was largely responsible for the moves and all that. I think the organic market is actually going to take place. It has taken over, and I think the organic market has decided that this bear market is over. Bull market starts, and I think Tether is now something that sucks. We'll have to deal with it with the NYAG, but that aside, I think that the price is I'm definitely bullish on price.
Yeah, 1 second. I want to up this. Okay, so going back to the sugar chart for a second, I want to make it clear, like, we all know that sugar is not a, hard money, right? Like, it's not a finite resource. Sugar is an infinite resource. You can, make as much sugar as you like. But people in the 70s and 80s also knew the fact that you can make as much sugar as you like, right? Like, they're not new to it. And the concept of it is, it's one of those rare occurrences where you get two exponential moves in a relatively short amount of time, relatively speaking. And you can see how sugar never reached anywhere near those highs again. But the ultimate low was made following the second exponential rise. And that's what you should be concerned about, right? This is my concern for Bitcoin. Now, this isn't very likely. I also believe that, hey, the second low is going to be somewhere higher than this low. And then we'll go and make a new high above both of these, right? Obviously, we can't compare sugar to Bitcoin, but let's ignore the fact that this is sugar and look at the fact that the price discoveries made by humans or bots that speculate on future price discovery. And the idea that when you get a second exponential rise in a short amount of time, that does not go to a new high, it adds to the probability that the low is actually going to come following the second exponential rise, not the first. Now, none of us want this in Bitcoin, but let's just say I would be a lot more bullish about the price of Bitcoin if we didn't have an exponential rise early in the year.
Yeah, I gotta say that did ruin a lot, but so did that 40% pump on October 25th. So I think that was enough to destroy, because think about my price target was 4,500 from a breakdown from this disgusting run, and if we had that same exact move to the downside, that 40% move from 7.3 would have put us at around 4,300. That would have been just a nice gentle tap on the bottom target that I had in a potential bear market low, potentially lower targets, of course, but that would have been a beautiful tap. And as we saw with the pump to 10.5, a rejection. Now that would have been much better, I think, in building a much more stable, organic, and believable bull market. So that definitely threw a wrench in the plan, and so did the parabolic increase from April 2nd to June, late June. But just so you know, Tone, I'm also holding on to that short right now. Kenny flipped short.
Yeah, I would start to get a little concerned about that short.
Oh, you're concerned? No, my Kenny boy just flipped short.
I'm starting to get. I'm not concerned yet, right? So the next candle becomes a green 1 price flip, and a green 2 going above a green 1, breaking this green line, which I'm actually lowering, would get me very concerned about your short.
Yeah.
So, like, literally in the next 5 to 15 minutes, this thing needs to go down lower than these lows.
So yeah, the number one thing scaring me most about this short right now is the wick space in the candle that really pumped us up into here, the green 3. That wick space has not only been consumed, but we've reached a higher high. So that leads me to believe that this is more of a channel bound scenario. And obviously, I think we could wick down a little bit lower to clean out an order somewhere in the body of the candle, of that green three that sent us up to the sky. So I'm not too worried. And the Kenny flipping short, I'm actually feeling pretty cozy. And again, I'm low lev, low capital. I'm trading in a very dangerous market, and obviously you got to be ready to change your mind. But this right now is the time to, being in a transition phase, which I believe we're in. Now is not the time to get too risky. I think that, when we hit 64, 68, it was pretty hard, but I got some longs in. So if I make a little bit of a slip up around here, I'm okay. So that's just, I think everyone needs to understand, like, yeah, you got to bite the bullet sometimes and take the loss. Sometimes it's okay to reevaluate. I think I can exit this one with some money in my pocket.
Yeah, so I haven't looked at the daily chart yet. The daily chart is bullish. The daily
Oh,
chart went bullish yesterday. Actually, I didn't do a video yesterday. The daily chart went bullish yesterday when you not only broke the 50 period moving average, which is significant, but that's when you had a green sequential above a prior green sequential. So you had a green 3 going above a green 2. The green 2 never went above a green 1. That activated a bullish trade, and you were above a moving average. So now I'm actually going to slide this arrow over. And if we can get above that green line, which is sitting at 76.75, that could set up a nice immediate jump all the way to the next level of resistance, which is the 128-day moving average, sitting at 8,200. And there goes your $8,200 target, Joe. I'm in line with you on that.
yeah, and you're speaking of that. What do you think about the a very obscure inverse head and shoulders situation we have here on the daily?
Uh,
Uh, we just met the right. So have you heard of it yet? And I don't know. I actually I call it obscure for a reason. I heard your so I it does seem to be playing out though.
yeah, it's a really weird head and shoulders.
Yeah, like anorexic for sure.
Yeah. So what's the target here? 76 down to about 65, about $1,000, right? So it's about $1,000 move. So yeah, so 8,200 would be the target off of this head and shoulders. Yeah, I can see the head and shoulders here, but I don't need to see the head and shoulders, right? Like I was on that target, assuming we
Mhm,
break 76 regardless, right? Like,
mhm.
like there are multiple ways to get to the same probability outcome, whether it's head and shoulders or it's whether it's what I was doing.
Yeah, I actually agree with that. I think there are, infinite ways to reach the same conclusion in crystal ball reading that we do for a living. So, but I just thought it was something interesting. In Bitcoin, you don't tend to get the artwork that you want, and sometimes when you do, you get counter trend moves. So, it was just something that was running in my head, and a few of us have spoken about it. So it was just something I was curious to get your feedback on.
Yeah, so I'm about to like if this candle ends, I'm gonna probably start tightening this range, right? So this range where I'm bullish above the green and bearish below the red, that range can tighten if these candles start to consolidate, right? And eventually this thing will break out one way or another, and you just got to jump on the right trade when it does. So
Yeah.
we got 2 minutes to go to next candle. I don't want to, spend all night on the call, but um, yeah, I mean, if the price is going to go down, it needs to go down like now because the longer it consolidates in this region, the higher the probability that it's going to go up, not down.
Yeah, agreed with you 100%. And keep in mind, this short wasn't necessarily a short like down to a ridiculous target, more of a scalp, which is more of what I do. I catch multiple trades, so this was more of a scalp to try to fill up some of that body space. Right now, my exit's at 74.79, and that'll be a nice little point oh 0.01 Bitcoin or so profit. So little moves like that are what make the day. But yeah, I'm definitely feeling like, you know what. I should have waited a little bit longer. There was a lot of hype going on into this, and I caught the wick, but we really filled it pretty quickly, and we made a new high. So that makes me a bit uncomfortable. In terms of a retrace or some sort of a full retrace or anything like that, I'd want to see that wick space get fought for and lost. Now that we've filled that wick space and we've created bodies in it and new highs, this is now a short that I might end up taking a little bit of a loss on, but that's the game.
Yeah, Joe, to be honest, I was surprised you took the short because I know, like, yeah, yeah, I haven't had you on the show in a while, but back when I did, you were a huge fan of the sequential on the 15-minute,
Yep.
and you were literally in the 3 or 4 range when you took the short. That's why I'm surprised you didn't wait for the 9 to come to exhaust the trend.
Yeah, again, my number one chart is not on TradingView. My number one chart is an exchange with an order book and a trade history. And what I thought I saw was, sellers starting to cap out a price. It seems like I was off by, around $100. So I think with a little patience, I can get my target. And again, low level, low capital isn't gonna, break my bank or anything. So I just need to. I think at this point, and I said this probably for the past three trades, I have to be more patient than I want to be. And even though this might hit some dangerously high territories, I still think that I can get out of my position with a reasonable profit or even break even.
Yeah, so here it is. Here comes another candle. And this is my green two above a green one, above a green
Ooh,
line,
yeah,
following a nine. Like, I have to be bullish here, man. That's
yeah.
exactly what that's my bullish line in the sand right there.
Ooh, ooh. Let's see. Yeah, they're a bit slow for this one. Um, but let's see what happens. Yeah, I'm a little curious. I think this has been a choppy space. I think there have been some fake outs, some liquidation hunts. Again, I'm not too worried. I think this was an overreaction, and I don't think that the sellers have really stepped in for this just yet. They are on their heels though. I have watched for a number of days. These pumps have really been pushing the bears on their heels, and that's exactly what I want to see. So for me to flip from a short position to a long position, I'll have no problem with because I want to be long right now. Unfortunately, I didn't see that, and
Yeah,
I made
there's a yeah, see, I would, if I didn't already make money on the long, I would also be a little hesitant of jumping in a long now because we just moved a lot.
Mhm. And that's pretty much one of the main reasons why this short makes so much sense to me. I think this was a little too much price action in too little of a time. And if that's going to be the way it is, and sellers are going to react the way that they have been, then I'm going to get my order filled to the downside. It's just that we're channeling. This might be like the consolidation type activity that we have going on. This could be the new trading that we have to deal with. The range bound situation we're stuck in until we break 7.6, until we break 7.8. But again, like trading Bitcoin, it's like if you're really betting on the anomalies, like the pumps and the dumps every time, you're going to get your heart broken probably 7 out of 10 times. And yeah, those 3 times might make all your money. But I've spent a lot of time trying to catch wicks. I spent a lot of time trying to catch bottoms and tops. And lately, I think it's more about where are the psychological points of control or the physical points of control and price where the most volume was bought and sold. And it seems like that was in the area of 75.24. So I think that's an important milestone to hold right now. So we'll see. And that was a contribution from my trading team, who were all working together.
Yeah, so that Kenny indicator is still indicating lower prices, right?
It did flip. The moving averages did flip, and it's waiting for an RSI confirmation before it goes full short. But it is in a short posture. So I'm waiting. I think I'm okay. I think I'm okay. This isn't a bearish engulfing candle by any means, but some rejection in it, like being in a range bound situation. I'm going to get a move to the downside $70, like that's going to happen overnight. If we pump again, if we pump on top of a pump, I'll be very surprised. And maybe before bed, I'll be setting up some reduced positions or completely stop myself out. But I overall, I think that we're in a very range bound situation. Every time we land into a, another space, we tend to spend some time there. We tend to wick our way up, we tend to wick our way down, and I think again, this market is designed to be a little bit painful. So, be careful with how much leverage you're using. If you're in with low lev and you're not stressing, then you can be patient if that's what it takes to catch the money. So that's what I'm stuck with right now. I prefer to be in the money the second I make a trade, and I was for a little while, but unfortunately, all I have left now is a failed memory and a 7544 Bitcoin. So I gotta wait and make the decision. Do I cut this out or do I be patient?
Yeah, I haven't looked at the 4-hour chart in a while, so it's time to extend that downward channel on a 4-hour chart. We still have not hit the bottom of that channel, which is now pretty damn low. And I really anticipated hitting the bottom of this channel in that $4,500 range going into year end, but Bitcoin was pretty resilient. But we are going to come up and hit the top of that channel soon. Eventually, it's going to break to the upside, but will it be this time? So I wanted to take a look at that 4-hour chart. Let's go back to the 15-minute.
Looking good.
Looking good for what? The short or the
No,
long?
it wasn't showing much data when I first saw. So I was joking. Right now, things are looking a little rough for me, though. And we're
Yeah,
pushing up into the
yeah.
risk space.
It's look, markets can go either way, but if right now, if I would rather be in a short-term long. Now I hate short-term trading. I
Hmm.
stopped doing short-term trading long ago. But if I was forced to be in a short-term trading contest right now, I would rather be in a long. As of the moment, this green 2 went above a green 1, following a 9, breaking prior swing high close. I mean, it kind of met all of my parameters. We are working on a triple 9 at this point, which makes it an even more overextended market. But I'd rather be in this long for the rest of the evening here and trying to sell the next 9 that comes.
Yeah, it's this is again. I think you might be able to hit a profitable long, and I might be able to close a profitable short. But it's tough. I'm not sitting here telling people to short. I think if anything, it's too much of a risk right now. And again, this is just one account. This is just my trading account. So I'm not encouraging this short. I'm not too proud of it right now. But the my trades earlier today are pretty good. So I can live with this.
All right, ready to call it a night, man?
Yeah, I'm on a ton of different meds and each one causes drowsiness, so I think I'll be sleeping good tonight.
Well, make sure you get out of that trade before you go to sleep. Either way, when you win or lose, or tighten up that stop loss. Hey guys, if you want to support, please check out the affiliate page on tonevays.com and come visit us at Unconfiscatable. Joe Saz will, of course, be at Unconfiscatable along with the Financial Summit in the Dominican Republic taking place in April. We will both be there as well. You can also do that stop. There we go. You see the background behind me? Loving the green screen. It's awesome. Joe, thanks for joining me. And I got to join you for a cigar one of these days before I go off on my trip around the
Yeah,
world again.
yeah. Here's the cigar room. It's as you can see, it's pretty cozy in here. And I was gonna say, man, if you wouldn't have said that was a green screen, I honestly wouldn't have noticed. I would have assumed you were in like some other part of the world preparing for something. No one knew. That's a beautiful thing that you got going on there.
All right, awesome. Hey guys, thank you for watching. Norm, thank you for your little donation at the end. Let's read your comment before we go. Tone, I'd love to see you create a small trading team for Bitcoin. I think you would make a good risk manager for a team of traders. That is potentially true. Maybe I'd fail miserably. I don't know. But here's what I do know. That is a full-time job. And at the moment, I'm too busy traveling. Now, I do want to take a break from traveling and go back to trading in 2021. But I'm going back to trading for me. I'm not going back to trading for you guys, right? So me putting together a team and giving out advice to that team takes away from my ability to trade. So that makes no sense, right? If I go back to trading, I'm trading for myself. So now I have to find a way to get compensated for having a trading group. It's something that I am not all that interested in doing necessarily. So I don't know what the happy medium here is. There's absolutely no benefit to me at this point to publicly trade my own portfolio. I'm just going to trade my own portfolio quietly, not publicly, right? Well, like, why do I want to, waste my brain cells dealing with a million people trying to follow my trading? Like, I work differently than most people. So while it's a good conceptual thing, the reality of the situation is a little bit different.
I can comment
We'll
on
see what
that, Tone,
happens. Hmm?
because this is what I like. This is what me and my team do every day. And it's like we talk about should we bring more people in, but it's like we trust each other. And it's only like, a core group of people that we can all, trust and all this stuff. And there's no point in monetizing something that it's just not worth the money to sacrifice the relationship you have building these indicators and programming these bots or whatever we're doing. It's just like, it's just not really a model that's that,
Right, but my situation is actually very different because, like you said, Joe, you just started trading in 2017. So you're working with your team. You guys are developing new strategies. If I go back to trading, I've developed my strategies
Mm.
10 years ago, right? Like if I go back to trading, I'm going to trade my own stuff. Like I wouldn't work with a team on new stuff. I never even got a chance to properly trade my own old stuff. And the only way to properly do that is to have peace and quiet and not look for new indicators. It's to, I have plenty of strategies that I spend, lots of sleepless nights putting together that I haven't told anyone. I just need to implement them myself. So for
Mm.
me, it's different because for me, having a team, it would be more distracting than useful at this point.
You're the
I
Chuck
would want to
Norris.
work on stuff that I already have.
Yeah.
So everybody's different, but I do encourage it. Like if you are starting out, putting together a small team where you guys can come up with new ideas and new strategies, that's the way to go because there is infinite amount of indicators you can still build going forward. Because one little tweak to an indicator that already exists is a difference between being rich one day and losing all your money. It's and sometimes you need people to help you put that together. All right, I'll let you go, Joe, and hopefully I'll see you on the show. Feel better and happy new year, and happy new year to you guys as well. Talk to you all on the next one.